It is a Jamaican icon, the company behind the best dressed chicken, a stock market darling that families have trusted for over 60 years. But in late 2025, the feathers did not just fly, they hit the fan. We're talking about a $46 billion hole in the balance sheet, a stock price that plummeted from $40 all the way down to $15, and a scandal involving secret debts, phantom chickens, and a cover-up in the United States that went on for years. Now, my people, 46 billion with a B Jamaican dollars. As a former politician once famously said, that is not chicken feed. No pun intended. How did a company that profited on paper actually have no cash in the bank? Why are auditors fighting with management over email servers? And most importantly, is this the end of the best dress empire? I'm your host, and this is Money Talk JA. Today, we are exposing the Jamaica Broilers scandal. What really happened? If you want more videos like this, please hit that like and subscribe to the channel right now. It will really help the community grow. Plus, you will receive notification when we release more content like this in the future. To understand the crash, you have to understand the hype. For decades, Jamaica Broilers Group, or JBG, was the gold standard. They were not just in Jamaica, they expanded to the US, specifically the poultry meat business. On paper, it looked like a master stroke. The US operations, they were reporting profits. The revenue was flowing, investors were happy, and dividends were being paid. It seemed like the perfect expansion story. But there was one tiny problem. The profits, well, they were imaginary. The first sign of trouble was not in the news. It was in the bank account. In early 2025, executives in Jamaica started noticing something strange. The US division was posting great profit numbers on the spreadsheets. But when you look for the actual cash to pay the bills, it wasn't there. This is the classic cash is king rule. You can fake a profit statement, but you can't fake a bank balance. A whistleblower finally stepped forward, and that triggered a forensic audit. And what they found wasn't just an error. According to the CFO, Ian Prasad, it was a coordinated and deliberate scheme. Here is exactly how the fraud worked. The US management team was essentially cooking the books in 3 ways. First, ghost chickens. They inflated the value of their inventory. They claimed that they had more feeds and more birds than they actually did. Second, hidden debt. They were borrowing money and hiding the invoices, so the company looked like it owed less money than it actually did. And third, fake sales. Unsubstantiated journal entries were made to boost revenues artificially. The result? A massive restatement of financials. They had to wipe out nearly $22 billion in past profits that never existed. The company's equity dropped from a healthy position to a negative $10 billion. Heads rolled. Stephen Levy, the president of the US operations, he resigned in May of 2025. The entire US accounting team was fired. But here it gets really spicy. The auditors, PricewaterhouseCoopers, refused to sign off on a clean bill of health. Why? Because they wanted to search the emails of the US executives to see who knew what. But Jamaica Broilers said no. They claimed that handing over these emails would breach data protection laws. Critics went wild, and you can understand why. They argued that hiding behind privacy laws during a multi-billion-dollar fraud investigation looks incredibly suspicious. Because they couldn't search the emails, PricewaterhouseCoopers issued a qualified opinion, basically telling investors we can't guarantee we found everything. So where does this leave us today? The stock crashed. The company breached its loan covenants and they reported a $7.2 billion loss for the recent period. However, CEO Christopher Levy insists that the closet is clean. They have brought in IBM to fix their systems, they are refinancing $24 billion in debt, and they are likely selling off the US meat business, the very division that caused the mess. The local Jamaican operations, Best Dressed Chicken and Hypro, they are still profitable and they are still strong. The chickens we eat here in Jamaica are fine, but the company's reputation, that is going to take a long time to heal. Now, this is a lesson for every investor. Watch the cash flow, not just the profit. If a company says that they are making millions, but they keep borrowing money to pay the light bill, run. What do you think? Can Jamaica Broilers bounce back from a $46 billion hit? Or is this just the beginning of the end for the poultry giant? Leave a comment below. I want to hear your take. And if you want to know which Jamaican stocks are actually safe to buy right now, make sure you subscribe to the channel. Click the next video on screen now to watch another Jamaican financial content. This is Money Talk JA. Walk good.